Hello, it's me again, Adam Iobst of A-Team Realty LLC, and today I'm going to be sharing with you my knowledge and experiences with purchasing bank-owned properties. Now, it's important that you know that I'm not an expert on buying bank-owned properties, but I am familiar with the process, and I hope that this little educational video does help you further understand the ins and outs of purchasing these type of properties. Now, the first thing that I want to go through is just an overview of the foreclosure process. That's important for you to understand. When a property is in a situation where the seller is unable to pay their existing mortgage, they may decide to try to sell it as a short sale, and I've gone through the short sale process in a previous video. If they're unable to sell it as a short sale and they've been in default now for several months on their mortgage, the property will go into a foreclosure situation. It's a foreclosure auction where the bank executes its right to redeem title to the property, and then they own it. And oftentimes it's a division of the bank called the real estate owned department that manages the asset moving forward. Now, banks, as you can imagine, are in the business of lending money and charging interest. That's how they make money. They're not in the business of owning real estate, so they want to move these things off of their books, so to speak, immediately. Their real estate owned department will then hire a listing broker. A lot of times they have relationships with brokers in the area to help them sell these properties. So that's a little bit of background on the overall process. Now, what we're talking about now is not purchasing it at pre-foreclosure or short sale, nor are we talking about buying it at a foreclosure auction, but we're talking about buying it after it's gone through those two stages and buying it as a real estate owned property where the bank already owns the property. You're going to find these properties listed alongside of all of the other properties that are available as either short sale or just a normal transaction directly from the owner. The difference with these properties is a lot of them are priced very aggressively. These are going to be your lower priced properties, and the bank is going to market them for sale as is, meaning that they're saying ahead of time they're not going to make any repairs to the property. They may be listed as REO properties, foreclosed properties. I've seen corporately owned properties. Those are all synonyms for the same thing. They're bank owned property. You would write up the same contract to the purchase offer agreement as you would for a normal resale. You would check the appropriate contingencies in the contract, noting of course that it is an as-is sale, that the seller's not going to do any repairs prior to settlement, and that you agree to do a general home inspection instead of a more specific home inspection that allows you to ask for repairs to be done. At that point, we would submit the offer to purchase and the earnest money deposit check to the listing agent. The listing agent would then send us back a counter if the bank were to change some of the terms, like the sale price or the credit back to the buyer, along with an addendum to the contract. Now, this addendum is actually quite extensive and can be anywhere from 10 to 20 pages long, and it completely changes the contract agreement. These are one-sided agreements designed to protect the bank. Let me go through a couple of things that I've seen in the addendums that I have. Now, every bank has its own separate addendum, and they're not all the same. But there are some things that are similar, and I'd like to just share some of the ones that I've seen before in the addendums that I've seen. First thing is they want you to sell it as is. They've already marketed it as is in the MRIS system and online, so that's not a big surprise. You're going to see something in that addendum saying that they're going to sell it as is. They don't have to complete a property disclosure disclaimer statement. Because it's a foreclosed property or a bank-owned property, there's no need to have the bank fill out those forms. They're pretty quick to respond, typically within a week, I'd say. Most banks will respond to your initial offer, either by accepting those terms or countering those terms and then giving you the addendum to the contract. The earnest money deposit check, they're going to ask for that as a certified check, and a lot of times we'll ask the listing broker to hold on to that check. That's different than a resale. situation where the buyer selects the escrow company. Typically on a normal resale, as is defined either by the day the contract is signed or the day the home inspection is completed. On a bank-owned addendum, what I've noticed before is that the as is defined at the time of closing. What that means is property is going to be conveyed to the buyer from the bank as it is on the day of settlement. So if you do a home inspection and everything seems to be in working condition, and then you go to settlement and you do your final walkthrough that morning and you find that the dishwasher or the appliances don't work or there's a flood in the basement, you're not protected as much as you would be had it been as is the date of the home inspection or the date of the contract. It's not unusual for settlement to be delayed. The bank is allowed to delay settlement up to, I've seen 120 days, 150 days even, without any repercussion financially or any risk to them being in breach of contract. Now on the same issue, but on the other side of the transaction, on the buyer's side, if settlement is delayed because of an action or inaction from the buyer and they're in breach of contract, there's a penalty, and it can be hefty. About $100 to $200 a day I've seen in some situations. The buyer will be charged for every day settlement is delayed. Now one other thing that you want to keep in mind is the type of property deed or the title that you're getting to the property, and this is important. On a bank-owned property, they have in their addendum, a lot of times, most of them have an option of conveying several different types of property deed warranties when conveying properties. Everything from a special warranty deed, which is typical, down to a quitclaim deed where the owner will convey whatever form of ownership they have to the property. And that sometimes may not be something that the new buyer can insure with title insurance. If you are purchasing a bank-owned property or from anyone, and you're accepting title to the property as a quitclaim deed, I would definitely have a real estate lawyer take a look at that title or the deed to make sure that it's something that you understand the risks involved with that, and it's something that hopefully you'll be able to get title insurance for to guarantee your ownership of that property. Talk to a settlement attorney about that in detail, but the reason I mention it here, it's important that you understand what type of title you're getting when you purchase the property. If it's anything less than a specific or a special warranty deed, or I would definitely talk to an attorney about that. If it's a quitclaim, that sets up a red flag for me. On these bank-owned properties, you may, as a buyer, be asked to use the seller's settlement company. That's not too unusual. In our area, the buyer has the right to select a title company, and the bank addendums on these real estate owned property sales, you're, as the buyer, being asked to forego that right and to use the preferred settlement company by the seller. Sometimes you're offered an incentive, such as they pay for title insurance or maybe a portion of the transfer and recordation taxes, but sometimes they don't. Sometimes they know that buyers are willing to accept their settlement company in exchange for a ratified contract and an agreement to purchase the property. Sometimes in these banks, the bank addendums on these real estate owned properties, the bank will limit the amount of reimbursement back to the buyer. In other words, if the seller is in breach of contract and the buyer wishes to pursue something in court, the amount of money that they would be entitled to is limited to the amount of the earnest money deposit back. Here are my final 3 recommendations. If you're going to remember nothing else about this video, remember these 3 things. The first one, when purchasing real estate owned property, be prepared to be locked into the deal. You may be asked for a certified earnest money deposit check, and that may have to be held at the listing broker's office. Second thing that you should be aware of is you should be prepared for that bank addendum. The last thing I want you to remember is to submit a reasonable offer. Don't overpay for the property, but certainly don't risk being beat out by somebody else who will recognize the value of that real estate owned property. All right, and with that, I'm done. Have a great day.